One of the things putting a bid into the bond market is the U.S. April job openings data that just dropped. We learned that in April, U.S. job openings fell to 8.059 million. The estimate had been for 8.35 million there. So maybe some good news for the Fed. Let's go to Bloomberg's Liz McCormick, who joins us now with more insight. I'm taking a look at the 10-year yield. I'm taking a look at the 2-year yield, and we are falling right now in reaction, Liz.
Yeah, Katie, this JOLTS number, like you mentioned, was below consensus. It was even below some of the numbers that from people that were already below consensus. So I think the bond market, we've had kind of a string of data that has kind of revived the hopes of how much the Fed will cut this year. And we know the JOLTS data is something Fed officials look at keenly. It's more forward-looking than some of the other data. And yeah, yields were down to come into the day, and they're falling more off this. So I think, like you see now, fully priced for a cut in November, and over 70% chance for one more. And for a while we were kind of swiping away even one in recent weeks. So I think this data kind of leads to, of course, we have Friday coming with the main jobs data, and tomorrow we have ISM services, which people are focused on. But I think the JOLTS data coming in below consensus was taken as a welcome thing for the bond market.
Yeah, definitely. And like you said, there's still a lot of economic data left this week to chew on. And really all that matters, it feels like, yes, we got good news on JOLTS, but what's really going to matter is that Friday NFP report. When it comes to the Fed, though, does that really move the needle that much, or is inflation still just too high to actually cut rates right now?
Well, I think inflation is too high for them now, but I think they have started to kind of, besides the kind of hawkish stance that we've seen lately, they're clearly concerned about the economy. They're trying to pull off, not having a recession and getting inflation down. So they're watching. I think Chairman Powell had said, I'll be concerned if there's kind of like undue or unexpected weakening in the economy. So they're watching. They don't want things falling off a cliff, but they, like you said, Katie, they do want some more softening in the labor market because they want inflation to come down more. So I don't know if it'll change the Fed much. We're going to get their new dot plot next week, right? They were at 3 cuts. Many people think they'll go down to 2. But I think you're right that they're not going to completely change their calculus, but they'll be happy to see softening in the jobs data if we see it on Friday.